the U.S. and the European Union are in the process of stealing $300 billion of U.S. Treasury securities from Russia. Now, these were legally acquired. The Russians sold oil. They got gold. They got dollars. They bought U.S. Treasury securities. They made the mistake of trusting the United States. And because these were dollar Treasury securities, they were held in a custodian called Euroclear, based in Brussels. And they had a total of about 300 billion. 200 billion were in Euroclear. So the kind of nuts running the EU and all the warmongers said, we got it. See, we froze them on day one. The U.S. freezes stuff all the time. We're very good at it. But stealing them is different. That's what's on the table now. So the idea cooked up by Ursula von der Leyen and the Europeans is, okay, here's what we'll do. We'll make a $200 billion loan to Ukraine so they can fight the war. The loan will be repaid by Russian reparations. So when Russia loses the war, they'll have to pay reparations, and they'll use that money to pay back the loan. And oh, by the way, we'll take the Russian securities in Euroclear and use them as collateral for the loan. Let's do it. Every lawyer who's looked at this, I would include myself, thinks this is completely illegal. It's actually crazy. It's crazy on a number of fronts. Number one, Russia's not going to lose the war. They're going to win the war. They're actually winning the war tonight. They're taking over Pokrovsk, which is the major logistics hub. So Russia's going to win the war, number one. If anyone pays reparations, it'll be Ukraine for all the Russian losses. And so the loan's going to go into default, and then you're going to turn to the collateral, and then you're going to steal the money. Now, that'll play out kind of as I described, unless it just falls apart in the first place. But if you're anybody else in the world, you're Saudi Arabia, you're Taiwan, you're Japan, you're Turkey, and you have large gold reserves, you say to yourself, hey, wait a second, what if the U.S. doesn't like what I'm doing? What if they don't like my foreign policy? Are they going to steal my treasuries? Well, the answer is they might, or at least they're doing it in the case of Russia, so maybe I ought to get some gold. And this is one of the reasons central banks are buying the gold. BRICS, you hear a lot of Brazil, Russia, India, China, South Africa, they're now up to about 20 countries. You hear a lot of the BRICS are going to start a new currency. They're going to replace the dollar as a reserve currency. It's going to be a BRICS currency, et cetera. Maybe in 10 years, I kind of doubt it, but it would take at least 10 years. I worked on the creation of the euro. That treaty was signed in 1991. The euro came out in 2000. It took 9 years to kind of devise the euro. So that's not going to happen anytime soon. But here's my point. The BRICS already have an international currency. It's called gold. In other words, they can trade all day long in rubles and Chinese yuan and Brazilian reais and the other currencies of the other countries in the BRICS. They'll run surpluses and deficits, as I described earlier. And occasionally you have to settle up. But you don't have to settle up in real time. You can do it, 2 times a year, 4 times a year, whatever. And you're settling on net. You don't have to settle the gross, because to the extent that the two-way flows, cancel each other out, you only have to settle the net. You can do that in physical gold, and there are a lot of ways to do that. So don't hold your breath waiting for the BRICS currency. It's already here, and it's called gold. Moran's appointment to the Fed, as I mentioned, erases any Fed Treasury line. Lyndon Johnson invited the chairman of the Federal Reserve Board to his ranch in Texas and physically assaulted him. He lifted him up and slammed him against the wall and said, "You're going to lower interest rates." And he did. So this idea that the idea that there's a separation between the executive branch and the Fed is nonsense. It's never been true, but it's never. By the way, when the Federal Reserve Act was passed in 1913, the Treasury Secretary was on the board of the Fed by law, and they met at the Treasury Department. So again, Treasury-Fed linkage goes way back. With regard to gold, we're not at the frenzy stage, but we're going to get to $10,000 an ounce a lot faster than people expect. And here's why. And, I can use calculus, but I like to keep my math at a 5th grade level. So there's a behavioral psychological phenomenon called anchoring. And anchoring is we get a number in our head, we get an idea in our head, and we anchor to it, and we begin to filter all the information we're getting through that prism, through that data point. So $1,000 an ounce is a nice round number. So if gold goes from $2,000 an ounce to $3,000 an ounce, and you have 50 ounces, you just made $50,000. And then if it goes from $3,000 an ounce to $4,000 an ounce, you made another $50,000. So people anchor on the $1,000 and the $50,000 that they make. But what they don't realize, at least right away, is that each $1,000 leap, as I just described, is easier than the one before because you're working off a higher base. So when you go from 2,000 to 3,000, that's a 50% increase. That's a heavy lift. But when you go from 4,000 to 5,000, that's only a 25% increase, much easier. Guess what? When you go from 9,000 to 10,000, that's an 11% increase. That's like a good month the way gold is trading. So my point is, you say, gee, we're never going to get to $10,000 an ounce. It took us so long to get from 2 to 3 or 3 to 4. But the point is, you're going to make your way to 4 and 5, and then you're going to go 6, 7, 8, 9 really fast because of what I just described. That's the dynamic. So gold will get to $10,000, but that's inevitable. But my point is, it'll happen faster than people realize for the reason I just mentioned. And gold is not the best inflation hedge. The correlation of gold to inflation, the price of gold to inflation is lower than most people realize. Gold is the everything hedge. It hedges against inflation, but it also hedges against deflation. During the Great Depression, the longest period of sustained deflation in US history, gold went up 75%. The best performing stock of the New York Stock Exchange during the Great Depression, when everything else fell 83%, was Homestake Mining, which was the largest gold mine in the U.S. and basis of the Hearst family fortune. Social unrest, civil war, natural disasters, what's going on in Ukraine, et cetera, Middle East. Gold is a hedge against all those things, and therefore highly recommended. So what can go wrong? I described the Trump plan. As always, I guess in my career, you always think about what could go wrong. I like to say if there was a financial catastrophe and I wasn't there, it didn't happen. Let's start with the Mar-a-Lago Accord. Moran's calling for the issuance of century bonds. What's a century bond? It's a 100-year bond. The longest maturity security today is 30 years. People go, 100 years, who would ever invest in a 100-year bond? The answer is a lot of people. Insurance companies, endowments, people with long-term liabilities like long-term assets. The British in the 19th century issued something called the Consul, which had no maturity. It was an infinite bond, just paid interest. Now, they can redeem them, eventually they did, but the holder had never got paid. You just got interest forever. It was a very attractive investment, and ultimately they were redeemed. The problem is if you start issuing 100-year bonds, there's something else that you're not issuing. And it's probably Treasury bills, which are underlying a $1 quadrillion derivatives market. If you're not familiar with the Q word, quadrillion is 1,000 trillion, and that is supported by Treasury bills. So be careful you don't stop issuing Treasury bills. BRICS, I mentioned, have a currency. It's called gold. The U.S. can manipulate currency rates if they want. They can't really manipulate the price of gold. From 1971 to 1980, the U.S. dollar crashed 95.6%, measured by weight of gold, not against other currencies, but against gold. When people say, hey, the dollar didn't crash, it's still around. No, it did. It went down 95.6%. If that happened today, gold would be $100,000 an ounce. Now, don't leave here and say, Jim Rickards says gold's going to $100,000. What I'm saying is, if we replay the 70s, gold would be $100,000 an ounce.